So what we're building is a banking environment where we'll be able to take on deposits from clients and businesses,
Right.
and kind of like a zipper. When you close a zipper, we rebundle fragmented money.
Well, Jack, welcome to the show.
Thank you.
Thank you for making the time.
No worries. I'm glad to be here.
Awesome. Why don't you tell us a bit about yourself? Kick us off then.
Sure. Yeah. Well, me and you, we've known each other for some time, so I will.
Guilty as charged.
I'll try to build up the story of. Well, you'll tell the story of how we met. I think that'll be fun.
Yeah.
I personally got interested in the world of blockchain and crypto while I was still in school. So I was studying marketing management at Copenhagen Business Academy, and during that time I stumbled upon Bitcoin, being kind of nerdy and just interested in tech. That was one of those things I just saw, and I remember buying 2 Bitcoin, and back then you could only buy it. It was quite manual. It was in 2013, so I wasn't one of the very early movers.
Right.
But still, I think everyone, even the ones that enter the space today, are still considered early in the space. So
How much did you pay for that?
I paid $15 per Bitcoin.
$30 in total.
Yeah, I remember transferring that money to a Japanese exchange. I had to do a wire transfer. I think I paid more than fees for my own bank to actually transfer the money to Japan. But it was the Mt. Gox or MT Gox. It was one of the first, big exchanges. But if people know the story of Mt. Gox, they did a bunch of shady stuff, and they don't exist anymore.
Right.
And neither does my Bitcoin.
They got hacked, right?
They got hacked, and I think there was some fraud involved, and I know I think the CEO went to jail, and honestly, I stopped following that because there was so much more happened in that space. But
yeah.
So when I got 2 Bitcoin, kind of let those simmer for a while, didn't really think much of it, and then I started seeing Bitcoin in the news a bit, not news, but blog posts and online articles and stuff like that. It started coming up.
People started talking about it.
People started talking about it, and they did so because the price started going up.
Yeah.
So when I logged into my Mt. Gox account, I had like $900 or something.
Okay.
It was a big jump. Can't remember the exact numbers,
Sure.
the exact jumps, but it was a big jump.
Yeah.
And well, that kind of sparked my curiosity even more about this. What is this? What is this? Right? That was why is it worth hundreds and hundreds of dollars all of a sudden?
Yeah, and other people think it's worth, much more than what you paid for originally. Why is that? Why are people suddenly going crazy about this?
And in such a short time, in just a few years, it doubled in price, and then it doubled again, and then it doubled again, and it seems like it's keeping kind of the same exponential growth curve. But back then, there wasn't a lot you could do with it. Nobody really knew what it was. Neither did I. Really, I wasn't really fully involved in it, but I wanted to be. So I created a group on Facebook called Bitcoin Talk Denmark, because there was an official Bitcoin Talk forum where kind of it all started. The first official big Bitcoin community was bitcointalk.org, I think it was called.
Right.
So inspired from that, I just created this kind of sub-channel on Facebook called the Bitcoin Talk Denmark. Try to find Danish people who were interested in that sphere of knowledge and that technology.
And that's still going strong. I think one of the biggest reasons I still use Facebook is because of groups and events. I think it's the only thing that keeps me going on Facebook.
Same for me.
And one of the most notifiable, like the groups that I see most notifications from, is Bitcoin Talk, actually, Denmark.
It's one of the good ones. It's we started with only a few members. So it was me and a few guys and girls joined in. Who am I kidding? There were no girls. There was just a bunch of nerds and a bunch of guys who just joined in and tried to talk about crypto with each other, right?
Right.
And as the price of Bitcoin rose, the more media attention came towards it, the more people started joining. And then the more rules we started adding to the group, grew the concept, changed the concept of it, got some moderators and stuff, some of the early people to help manage the group. And now it's like think 14,000 people, but so it's not the biggest forum out there, but it's a quality one.
Was there a lot of shit going on in the group, like people spamming and all that kind of stuff? Because I think the reason why I still use it also is because people actually post relevant stuff. So there must be a moderator or somebody.
We don't allow. We have kind of strict rules. Yeah. Like we don't. So for example, we saw that all of a sudden everybody started posting referral links. Like, hey, if you sign up using my link, we both get 5%. And it didn't. So we said, all right, you can post referral links if it's followed by an in-depth kind of argumentation of why you did what you did, why you think is cool, or there had to be some kind of value in it. Right. You can't just post, hey, use my link. Yeah. And in the early days, people started buying and selling to each other through the group. So we tried to structure that somewhat, like making a voting system where if people had a successful trade, they could give them a rating, and then you could see who the top raters were.
Nice.
But as this kind of grew, I stopped that because I realized that moving into a regulated way of doing things is not supported by these kinds of trading groups.
Right.
And people cheated each other sometimes. People, had disagreements, and then people started saying to me, "Hey, man, Jack, this guy just did this to me, and this guy." And
fuck
I don't
you. You were the reason why I got into the group in the first place. It's your fault.
That wasn't too bad. It was more like, hey, man, this Jacob guy, he left out 100 krona out of my payment. Can't you let him know that he's a douchebag? No, I can't. I don't want to be in between these things. Right. So we quickly stopped that, and then it just stayed as a forum of conversation. And to this day, every time something new happens, it gets discussed in the group, and there's tons of info. But basically, through that group, I initially it was a few hundred people, and then a few thousand. But in the time where it was only maybe a handful, I looked for an internship opportunity with a crypto company.
Right.
There were none. So I just wrote in that group like, hey, people, do you know any crypto businesses? And then a guy contacted me who was running a business called Beeps. And, for those who know the Danish fintech crypto scene, they are the ones that merged with Bitcoin Nordic and then became Coinify. So I became a part of Coinify very early on in the process, having a marketing degree, and I did an internship with them. And that was kind of the first time I really sunk my teeth into the professional world of Bitcoin and blockchain.
And what does Coinify do, just for the people who are not unaware?
Coinify, they make it easy for businesses to accept Bitcoin payments on their websites or their physical shops.
Yeah.
And they also enable a buy and sell service for regular folks to buy their first Bitcoin.
Nice.
My focus was mostly around the business aspect, getting businesses to accept crypto payments and blockchain-based payments. Bitcoin only back then, and then they kind of added more cryptocurrencies to their portfolio.
How did that go? Because I don't see a lot of, at least in Denmark, I don't know.
There were more back then accepting Bitcoin payments, more shops in Copenhagen back then when I worked at Coinify than there are today.
Really? Wow.
Yeah, because I don't work there anymore. So. No, it's a tendency that we see because the reason for businesses to start accepting Bitcoin payments is not as apparent as the ones who want to pay in Bitcoin payments, their needs. Like if you have Bitcoin, you want to spend it, but there are smarter ways. You can get one of the crypto debit cards. You can get other ways of actually spending your Bitcoin without really trying to convince a shop or a merchant to start accepting something new.
Right.
And also something very important in that is the price volatility of Bitcoin is not tangible. It's very abstract for businesses and governments and taxation authorities and kind of everyday payers to use and utilize. I know that firsthand because during my marketing time in Coinify, I said, let me try and see if I can live 1 month only on Bitcoin. Give me my salary in Bitcoin plus like 10-15% or whatever for the hassle, and then, and I'll try to live only on Bitcoin.
And when is this? This is 2014, right?
14, 15.
Yeah, something like that.
Around there, yeah.
And that's where you got the infamous name Bitcoin Jack.
Yeah, so yeah, it was my short famous moment because I was tweeting.
Claim to fame.
I was tweeting regularly, like, okay, now I'm in this shop and now I'm trying to do this, and and some media sites they covered the article. So whenever I tweeted, they wrote an article.
Oh, really?
I kind of had that small feeling of being stalked by the media. Well, it was Version2, and it was another Danish. I can't remember the details. It's some while ago. Yeah, but it was fun. Yeah, and they dubbed me Bitcoin Jack, which I didn't mind. It was kind of fun, and
you must have been spending a heck of a lot of money when you look at the price of Bitcoin today.
Well, I got a tattoo, right? I got a B because I convinced my tattoo artist, lovely lady, to accept Bitcoin payments. I am the only person, last I spoke with her, I'm the only person who have since paid in Bitcoin. There has only been me, but she has kept those Bitcoin. And so she is quite happy with that. I can't remember how maybe two whole Bitcoins or 3 whole Bitcoins or something like that, right? Now with a price of $20,000 per coin that we saw some time ago and that we might see again,
that's the best deal that she ever made in her tattoo shop, at least, probably.
Yeah.
Wow.
So
and that was just a tattoo. You must have, you had other expenses.
I paid friends to drive me around because I couldn't take the bus. I had to eat on Hungry DK, like kind of an online pizza, whatever delivery service.
Just Eat a whole.
Yeah, but they had Bitcoin payments through Coinify.
Okay.
So food was all right. I could eat. I remember one day the Hungry was down or something, and I couldn't order food. I'm like, shit, how do I get food? Right?
The media is watching.
They need to know what I eat. No, it was fun. But the reason that shops mostly don't accept Bitcoin payments today, is that, like in its pure form, is that handling Bitcoin is still intangible and volatile. There are also plenty of people who lost their coins, who suddenly got a new phone and their wallet was gone, and people who threw away their USB keys and stuff like that. So it was still a very nerdy, very techy kind of thing, and thinking that shops should accept Bitcoin payments in its raw format was quite of a naive mindset from the world of crypto enthusiasts.
And I guess that a good example of that is how we met, you and I. I think we met just before you became Bitcoin Jack officially.
I think so, yeah. It was while I was doing the marketing degree. Yeah. After the marketing degree, I spent a few years, I think 2 years working with Coinify, maybe more. And then I went back to school, studied innovation and entrepreneurship.
Right.
And there I really started building upon Bitcoin and crypto and really started. So I think that we met while I was actually still doing my first degree. It was way before the whole Bitcoin Jack thing. We were in the school incubator next to each other.
I remember it as 2013 or something.
Maybe.
So 7 years ago, more or less, because it was around Julefrokost, the Christmas lunch that we always have. And right now, today is November 20th. So yeah, probably, almost 7 years from now or something like that. Yeah. And I remember it vividly because I've always been into technology. I've worked with technology my entire life. I actually mined Bitcoin when I was at university myself in 2010, 11. I remember it as just on my computer, because back then you could do that.
But yeah, you could that. Yeah. Was it a laptop? Did you mine from that?
Yeah, on just a regular laptop back then.
Do you remember how many, if any, how many Bitcoins you got?
I think I remember it as 2 or 3 Bitcoin.
Yeah,
and I completely forgot about it, right? Just like everybody else, I bought a new laptop, I completely forgot about the Bitcoin, and then a few years after, I realized, holy crap, I could have bought 10 laptops with the Bitcoin that was on it. But
every lost coin is a donation to everybody else, right? So there will only be 21 million Bitcoin. Yeah. You just lost 3. Yeah. Those are gone, like destroyed gold. It will never come back again. So thank you for the contribution to the rest.
You're welcome, guys.
I wish I had a bunch myself, but I think the ones who have Bitcoin see it like that.
Yeah, I guess you can see it as charity. That's a nice way of putting it, instead of kicking yourself over it. But anyway, so I've mined Bitcoin and just, I guess, lost interest. There's a lot of other things going on. And then we met, and, you sort of, I got interested in Bitcoin again after meeting you, because you said, listen, it's not only about mining. You can also send, receive. You can do it on your phone. It's like, okay, Jack, you need to show me this. Like, how does this work exactly? So I downloaded this Jack's app, which I'm sure is still working.
It wasn't my app.
It wasn't yours.
JAXX, I think it was called, right?
But very similar to Jack.
Yeah.
Never thought about that actually. But anyways, I downloaded the app, and then you send me. I remember it as 0.1 Bitcoin, which is worth like $2,000 today, I guess. And again, just like my laptop, I completely forgot about it, threw out my phone, so that's also somewhere. So I've been donating a lot, I guess, just like everybody else who's been early in Bitcoin.
You've been a charitable guy.
But that's how we met, and you actually, and I think that's an important point when it comes to Bitcoin and blockchain. You know, people like you have created an interest around Bitcoin. You created a group. You've gone around in the world, you know, spending Bitcoin, sending Bitcoin to people like me. And today I'm very involved in blockchain and cryptocurrency. And it all started, to be honest, with you sending me that Bitcoin. And it's like, okay, holy crap, you can actually send and nobody's checking. There's no checks. Like, it's completely open. It's open source, which is something that I love, of course.
Well, I'm happy. And that's the cool thing about Bitcoin and the cryptocurrencies in general. They are community driven. You know, it's like the old days when you heard about new cool stuff. You didn't necessarily hear it from an advertiser or the media or the government. You heard it because you knew somebody who used this or saw it or something like that.
Yeah.
And that's kind of the essence of community driven technologies and open source technologies. So I'm happy that I could help plant a seed. You know?
Yeah, and I think you've probably done it to a lot of people, not just with the media, but in general, just you being you, going around and sending.
I remember I did it on Reddit once. There was this thing called Change Tip, where you could donate small amounts of Bitcoin to people by just tagging them and their username on Reddit and Twitter and stuff. It was a kind of an interactive thing. But so if I said, you know, at Mark, one coffee,
right,
it would send you $5 or $4 or however much the predefined price was.
Right.
So I remember making a Reddit thread once where I said, if you can make me laugh, tell me a joke and I'll give you Bitcoin. So it was a kind of a cool thread starter, and then if somebody said a fun joke, I could just tip them a few dollars. So there are, you know, it becomes really easy to send value, similar to how you can send a tweet or how you can send anything else. So for a lot of people, this was weird. Like, can I actually just receive $5 from this random guy on Twitter? Yeah. Like, what? How? When? How did
and
this
I can
happen?
just create a wallet myself. Nobody checks on me, and nobody collects my passport.
Yeah.
Yeah. It's a new.
It wasn't new. It was a paradigm shift, and you know, I realized that in my time in Coinify and having worked in this space. But now, you know, it's a decade after, and there's so much that has happened in this space that the conversation is not about Bitcoin anymore. It hasn't been for a long time. Bitcoin is interesting, don't get me wrong. It's fascinating. Still to this day, and I think it has a future also. However, the naive mindset that the crypto enthusiast had is no longer here. Like, we've learned and realized a lot of things. So, for example, things like people are not as tech savvy as we might expect they are.
Right.
My mom and dad and sister and family is not going to use Bitcoin in its core and raw format.
Yeah.
So I think that now we're in a time where there's so many different things happening, but most importantly, that the real world of regulation and the real world of finance and real live exchange services and liquidity providers and all these financial entities are not starting, but have gradually realized over the last few years that this is something they need to enter.
Right.
And we're seeing the growth of concepts like securitization of assets, where you have real life assets like gold and silver or electricity or represented as an IOU on a blockchain.
Yeah.
Well, that means that you now have a token that you can transfer, like you can transfer Bitcoin or Ether or whatever you want. You can transfer this without the barriers that are usually in place to transfer those kinds of objects. So if you want to trade energy, well, there are processes for that with plenty of middlemen. If you want to trade stocks, there's plenty of processes and plenty of middlemen. And these are the barriers and structures that are being broken down by enabling the movement of actual traditional assets. Forget the world of crypto for a second, but actual assets using an open source technology. Cryptocurrencies in their raw format are like the gasoline that runs the engine. It's necessary, it's needed. You need ether to purchase gas and pay the miners and run the system.
Network, yeah.
But that does not mean that systems being built upon the blockchains need to even understand and know that a blockchain is involved, that gas is involved. Right. So we are moving into a world of Facebook Libra, of JP Morgan coin, of Euro chain, of Fed coin, of Chinese government central bank money on the blockchain. Moving into the world of securitization of actual assets and regulated securities exchanges. And my company, Aryze, which I created after being with Coinify for some time, and I ended up running their innovation lab where we were building a bunch of cool prototypes and proof of concepts on different stuff using blockchain and programmable money. But we could never reach the phase of implementation, because as soon as we wanted to implement it in the real world, using partners with NGOs or governments or different use cases, we're focusing on remittances or salary payments to third world countries and whatnot, it was always very difficult to reach the implementation phase because of the price volatility, because of the fact that Bitcoin is intangible, is difficult to use, and is not understood by regulators, paired with a bunch of terrorism, a bunch of drug money, a bunch of fake news, a bunch of whatever you may put in that pot of Bitcoin. So that pot is kind of being fragmented now, and new things are coming to exist. And the company that I've created now 3 or 4 years ago is called Aryze, and we're creating what we call digital cash. We want to create a digital representation of sovereign cash money, like a $100 bill, a digital representation that can operate on different systems and blockchains and different banking systems.
Okay, so both the sort of old world, the financial systems, etc., the existing system in place, and on blockchains, the new fancy technology. Because the way I normally like to see it is that you have centralized databases, basically. The financial systems, you have JP Morgan, you have Bank of America, whatever bank it is, they have their own siloed system. They maintain that. And actually, ironically, they normally use some open source technology in there to build their siloed databases and systems.
Because it's often better.
Yeah, exactly. And then there's the new worlds that Bitcoin has pioneered with blockchain, basically distributing data across a network, which needs to be maintained by miners or what have you, depending on the consensus mechanism. But Aryze is actually, or is building a bridge, you can say.
Yeah, exactly. That's the phrase we use as well. We're saying we're bridging the gap between the world of finance and the world of crypto. Essentially, we're breaking down the silos, because we can create an online bank, an online banking system, but it's yet another silo. It only works within our system and our framework. But in order to create true programmable money, means that its movement needs to be controlled or facilitated by a platform which is not ours, an open platform. So if we take Ethereum, for example, you can have the JP Morgan coin, you can have Facebook Libra, and you can have a third stable coin, it's called, transferred on the Ethereum blockchain. So you can actually transfer a JP Morgan dollar on an open source blockchain. Now, what Aryze wants to create, and again, it's called digital cash, is because what you would be able to transfer, the electronic dollar, the digital dollar, or whatever we end up calling it.
Sure.
It is not like a JP Morgan coin where it's an IOU representing a dollar deposit that you keep with JP Morgan. It is a digitalization of actual cash money. And there's a vast difference between bank deposits and cash in your hand. Besides, one is digital and one is a piece of paper, but the piece of paper is actually more secure in the sense of credit risk. It has sovereign backing, it has government guarantee. $100 bill will forever remain $100 bill. Forever.
Until the Fed goes down or the US wants to apply a new standard, or whatever might happen.
Whatever might happen, some things do happen, but in the case of global finance and global trade, the dollar is still a very active element of that and in use, and there's somewhat a lot of trust in the dollar. Yeah. But as soon as you take $100 bill and you deposit it into a bank account, it becomes the property of the bank.
Right.
And what you receive in return is kind of a debt instrument. They owe you now $100.
It's an IOU, right?
It's an IOU. Yeah. So the bank now owes you $100. Yeah. But that can change. That has changed. Banks, they do go bankrupt. Right. Banks, they do commit fraud, from the smallest to the biggest bank, as we apparently see also from Denmark. Right. And there's a lot of analog activities associated with the way that banks, they handle customer money. But most importantly is the fact that they take on risk when they offer credit and lending activities to businesses and retail and regular folks, right? Right. So whenever you go into a bank account, into a bank, and you want to borrow $10,000 to buy a car, well, that doesn't mean that somebody has put in $10,000 into your account and now that money is yours. You have the bank, which has a permission that based on a fraction that they keep in the central banks, they are allowed to print, kind of add money to the money supply. Right. Thereby, the bank. That's why the banking system is called a fractional reserve banking system. That's how it operates. That's how banks operate today. Right. You take roughly out of $100, you put roughly $10 in the Fed, and you use $90 for lending. Right. That's what it means to be a bank. Right.
So $100 deposit becomes much more than Absolutely. 100. It becomes 10 times more.
So actually. You lose its ownership of it, and you rather trade the ownership of sovereign cash money to a part of the bank's promise. Like it still has value. It's still a bank. It's still a promise from a bank, but it doesn't exist physically one-to-one like cash does. So what we're building is a banking environment where we'll be able to take on deposits from clients and businesses, and kind of like a zipper. When you close a zipper, we rebundle fragmented money, meaning when we get $100 deposit, say from a bank account, and it is transferred to us, we receive that transfer, but we don't do any lending and we don't create any credit. We place those funds back into the central banks where they were initially printed.
So no fractional reserve, like you.
No, that would answer
1-to-1 basically.
Yeah, exactly. That would be that would be full reserve banking. Yeah. The concept of full reserve banking. Right. In today's terms, we use the words central bank digital currencies. That is essentially what. When we're talking about central bank digital currencies, like happening in China, like Fed coin, like Euro chain, like all these things that we're talking about, conceptualizing, is essentially a way of looking at that issue. But the way that stable coins operate today, like the JP Morgan coin, like the Tether dollar, like all of these stable coins on a blockchain, well, they all have the same kind of credit risk, or even worse credit risk than they would have if you just had the money in a bank. Okay. So it's a part of making money programmable. Right. But what you're making programmable is not actually money. It's an IOU, a bank IOU. Right. And in the case of, for example, Tether, there's been a lot of controversy around how they keep their money safe, which banks they use, and how they actually prove their solvency, and
have they proved it? Because there's still some.
I do not know the details of their conduct, to be honest, and I don't want to badmouth anyone in the space, but I know that it doesn't follow the standards that you would expect from Bank of America or JP Morgan, or they don't follow the very strict regulatory clearances that are needed in order to operate those kinds of services. Right. And there are plenty of ways how you can use Tether to launder money. Right? So it's not a great thing, but it's a step towards making money more digital. Right. So the JP Morgan coin on Ethereum, it can be used on Ethereum. It's really smart, and you can transfer it. You can transfer it from A to B using only gas and miners. That's really cool. You can break those silos.
The JP Morgan coin, is that just a stable coin to dollar?
Like it is. It is. It's a dollar deposit with JP Morgan. Right. What we want to do is create something similar to that environment. We want to make dumb money smart. We want to make analog currencies digital. But we want to take it a step further, saying, well, similar to cash, deposits kept with Aryze should be owned contractually by the depositor.
Okay.
It's
the bank is not. You're not a bank, basically. You're
essentially
facilitating the transaction.
We would need to operate under licenses that are given to banks.
Okay.
But the definition of a bank is a financial institution that is permitted to offer credit and lending.
Yeah.
We just don't.
Right.
We need to become somewhat a bank to obtain the relationship with the central banks that are needed for us to actually offset the credit risk into central bank deposits.
Okay.
So yeah, we're kind of becoming a bank, but not in the traditional ways that banks work. We're creating a full reserve bank. And an important part of this is saying, well, now we have a deposit with us. It is owned by the bearer, meaning it's your deposit, it's a bearer instrument. So you contractually own the actual $100 that we keep.
Right.
That means if Aryze should go bankrupt or go away or do anything, the money exists. The underlying deposits are still kept in central bank deposits and reserves and treasury bills or other instruments that have government.
You hold your own keys, as we normally say in blockchain and crypto.
Yeah, but not in this model. It wouldn't be as literal as in the world of crypto.
Right.
You would have an account with us, an online bank, and you would have some rights. And in the case of Aryze's disappearance, there will be processes where you, through legal channels, can obtain and prove that the money is yours and then claim it.
Okay.
However, one thing that's really important here is step one is building a full reserve bank, integrating with the world and the banking ecosystem that are in place, and being able to accept deposits and offset risk with central bank deposits. However, once money is fully digital and fully backed, we can then we have built a mechanism so we can issue or mint IOUs on third-party ledgers. So if a client wishes to use Ethereum, if a client wishes to use Stellar or Neo or Tron or whatever blockchain may be of interest for that individual client, they can then issue cash onto their preferred ledger. And that enables tons of opportunities for customization.
So you're agnostic in a sense to what blockchain people want.
I'm as agnostic as an ATM. When you take money out of an ATM, nobody decides what wallet you keep it in.
Right.
Like you decide what wallet you want to use. And if Mask wants to use Ethereum for something, if Tradeshift wants to use Stellar for something, if an Asian company prefers to use Neo for something, or they need liquidity on Tron for something, they should be able to issue cash onto whichever platform they wish to use. Now, in our banking environment, our app is called MAMA. It stands for Multi-Asset Modular App.
Right.
Now, that's a really cool and like modern payment app inspired by the way of doing things in Denmark. We're one of the most digital countries in the world. 95% of the Danish currency is digital. And we kind of know how it's done in a smart and seamless and sexy way, right? A modern solution. So this application in itself will be used by a lot of people. It will so because of its modularity and customizability, and there's a bunch of cool aspects of the app. But the essence of it is that it is where digital cash lives, and it is where digital cash can be sent to other places from.
Right.
But we need to create incentives to keep the money in the MAMA ecosystem, rather than withdrawing to PayPal or withdrawing from an ATM or whatever it may be.
Right.
So by having the interoperability feature to blockchains, we can actually take solutions that live in the world of Ethereum and offer them to the users of MAMA through what we call modules. So we can look at what's out there in the regulated world of lending and finance and coins and rewards and travel cards and whatever, but we can also look into the world of blockchain and staking solutions and distributed apps and all kind of innovative stuff that happens, and make those solutions available as modules to users of MAMA. So we are truly bridging the gap between the world of crypto and the world of traditional banking. And the interoperability aspect of the minting IOUs onto third-party ledgers, that mechanism is a really important part, but it's not an obvious part. You'll just be able to do cool stuff. or my mom will just be able to do cool stuff that she couldn't do before, like maybe receive 5% interest on your deposits. Like what banks give her interest? Well, we could do that. We can create a mechanism where we benefit from the world of staking and investing and peer-to-peer lending and all kinds of cool solutions that exist in the world of crypto, and we can apply it and offer it to regular folks who just uses the Mama app. And suddenly we can offer things like, get interest on your deposits. Right. And that's amazing in a country with negative interest rates like Denmark. But things like these, and then if people want to know how does this work, naturally they can go and read. But today, if you want to do that, you need to get an Ethereum wallet, connect it to some, say, MetaMask, and through that use some kind of third-party system or access a distributed app where you can stake and exchange and trade. Try using Uniswap if you're a regular person. It's difficult. But we can make those kinds of concepts available for the masses, and that's why Mama and its payment ecosystem will be able to compete on a very high level with the other payment apps like Revolut and stuff, because it has a modular approach where communities will build modules and extensions, and the core application in itself is based on government money with no risk.
So it's a little bit like WordPress. I come from the web and mobile development world, obviously here in Delta, and WordPress has, I think, they are more than 1/3 of all websites are built in WordPress today, like which is insane, right? I mean, imagine every third website that you visit is powered by WordPress. And then the interesting thing is WordPress is obviously an open source CMS, content management system, where you as a developer, you can add plugins, you can add themes, you can add all these different things that makes up a website. And then they have WordPress.com. So they have WordPress.org and WordPress.com. Basically building an easy way to set up a website. In your case, is setting up payments, basically. So they have this centerpiece around it. And then you can add all kinds of modules, plugins, themes, what have you. So is that similar how Aryze is thinking? Like obviously within payments, but
kind of. Yeah, you could say when you get a WordPress site, you go to the plugin market, you can see all kinds of extensions that will enable your website to do more cool stuff. In the realm of Mama, what we imagine is that retail users like you and me will have a basic app, kind of PayPal style, where deposits are kept one-to-one with central bank money. And
dollars, whatever.
Yeah. And then, well, in the case of, let's say, depositing dollar, it will be backed by the dollar. The euro will be backed by euro. So each currency will be backed by its sovereign promise, so to speak.
Nice.
Now that in itself is a really cool product, but that also enables us to say, well, 60% of the world is today unbanked of adults on this planet. And why are they? Well, they don't have a lot of money and a lot of ID. So banks don't want them. They're too pricey.
Is it 60% of the world?
It was. Maybe it's a bit less now, but it's those big numbers of the adults in the world are underbanked and unbanked.
Damn.
Now, why is that? Well, banks don't want them. They don't have a lot of money and they don't have a lot of identification. So they're a pricey client. They're not going to buy a boat and take a loan and all kinds of stuff. And they just want to keep their $40, $50, $60 securely. Receive some payments from Fiverr, from freelance work, and from driving Uber. They can't.
Take it out as cash, and then they're not relevant.
They're excluded from just having these bank accounts. And Aryze aims to offer these individuals a bank account because fundamentally we're not dependent on the size of their capital to offer them lending and expensive credit or whatnot. But we can actually, through modules and through our association with the world of blockchain, these guys and girls could actually start investing as down as $1 or a few cents and start receiving payments online for creating for the gig economy, like creating a logo on Fiverr and receive a $5 deposit directly to your online bank account. We want to enable these kinds of activities to the people who are today left out, because in 5-10 years, they will rise up and they will then be the ones dragging more newcomers into that realm. But we're not going to get all the unbanked people of today to get a PayPal account and a credit card, and they're gonna do like M-Pesa did. Like it's a payment system in Kenya based on telco and SMS payments.
Right.
It's hugely popular. Everyone uses it.
Yeah.
And these people are not going to go back to credit cards. They never had credit cards. They never had copper wires dug into the soil so they can have terminals in their shops.
Yeah, that's a good analogy.
They're using the antennas to begin with, and when they're jumping on a new platform rather than looking at the old stuff.
Yeah.
That's the issue with the most digital country in the world, like Denmark. Yeah, we're digital, but we're analog, and we're legacy. We're digitized using legacy solutions. Yeah. We're not looking into third generation solutions as much as other places are.
So the user experience will be, I deposit, let's say $100 to the Mama app. What can I do then? So I have like PayPal or whatever, Revolut, whatever I deposit to. Then I can suddenly use other services that I wouldn't be able to use with PayPal. Is that the idea, or?
That's kind of the end game.
Right.
You and me, we're the last piece of the puzzle.
Right.
So let's say the world is unbanked. How do we give them access to banking? Well, we need to know who these people are. How do we know who these people are? Well, we do so by associating ourselves with businesses that knows a lot of these people.
Right.
So our approach is a business to consumer strategy, where we first will offer Mama Business, our corporate banking solution based on digital cash. We will offer that for strategic certain segment of clients. That will be right now in the realm of NGOs.
Right.
So we have an agreement in place with a branch organization which has given us access to a very large realm of NGOs, from the Boy Scouts to the big global NGOs.
Cool.
And we have spent quite a lot of time in trying to understand the challenges that these organizations face and kind of paint a picture, an overall picture to understand, we know that fees are high. We know that the barriers are high. We know there's a lot of issues with payments, but we wanted to explore how apparent those things are for the companies in the world that try to do good. Because that's where the high fees hurt the most, right? For the companies that try to do the best.
True.
Or try to do good. So we really sunk our teeth into it. And there I can give you an example. For example, let's say you want to enable banking solutions for communities in the Philippines.
Right.
Or Filipino sailors. Right. How would you do that?
Fishermen in the
Philippines, right? Well, there are organizations that hires or employs fishermen or sailors. Maersk, they have, I think I read 100,000 sailors from the Philippines that work on their boats for a long period of time. Now, they're not fishermen, they're sailors. Right. But the way that these guys are getting paid is by cash when they dock in Miami. And they go to Western Union, and then they wire the money back home to Manila or whatever the family lives in the Philippines.
And pay an obscure
amount. And the family goes and withdraws the money in cash, and then they have cash, which is insecure, and they have to figure out other solutions. Right. So they might download GrabPay, which is an app they use. And then they go to a shop and deposit the money into Grab, and Grab takes a small cut of that. So in the end, the person who should actually receive the money, is in the case of remittance payments, they lose so much of the money they should have received
in fees.
Exactly. Yeah. So we have various use cases that we're looking on, from feeding bananas to orangutans in Borneo. This is some of the challenges that Save the Orangutan are dealing with. To how do you pay the person who brings the face masks on a tuk-tuk in the Philippines who drives, and you have to pay them, or blankets for a hospital? How does Red Cross, how does an employee on the ground actually exit and get money that they can use to pay for the medicine that some person brings? And we really try to understand these global challenges. Right. And we have designed a model where we initially go through the businesses and their needs, and then in the end, the incentive for you and me to enter the ecosystem will come from the business. Yeah. So you and me will join Mama or Digital Cash when Red Cross says, donate $10 using Digital Cash and we'll plant a tree in your name, or we'll use the savings to buy books for this child, or whatever, because every single person that they recruit or convert into paying with Digital Cash would essentially be a saving, a huge saving for Red Cross. Nice. So the modules, the extensions to the Mama ecosystem will be what convinces us and regular folks to download Mama. Yeah. Not necessarily as core features, but because now you can you have your Oyster card or your travel card or your reward app or your whatever. You can have it all in one place. Right. But each module can be an onboarding vehicle for its own segment of people. Right. So in the case of, for example, the Boy Scouts, we have 100,000 kids going to the Boy Scouts. That means 100,000 parents are paying monthly for the kid to go to the Boy Scouts. Yeah. And they are paying using credit cards and mobile pay and banks. And when we look into the challenges for the Boy Scouts Association of Denmark, it's ridiculously expensive. It used to be in cash, so they actually used to make a bit of money in the end after a trip with the kids. Right. But now they can barely make it because they have to pay all the fees to mobile pay. Right. So imagine now if the Boy Scouts Association told the parents, dear dad, dear mom, would you mind paying in this app instead? That's what we do with betaling service in Denmark. Right. You didn't opt into betaling service. Somebody told you use this, and you're, all right, I need to pay my rent, so this is the option. True. Well, what if the Boy Scouts said, this is the option now? You have mobile pay, or we save 5% in fees if you use digital cash. Yeah. Would you mind? Yeah. Who would mind? Nice. And all of these activities are not based around Denmark, and they're not based around the fact that we need to invent them. It's a community-driven approach, right, where Aryze is already now members of the Philippine fintech organizations and the Armenians and the UK ones and the Danish ones, and we kind of have a presence all over the world. And the idea is to have country representatives or kind of jurisdiction managers in these locations, which can scout for solutions that are there locally, right, which could make sense to have as a module, right, or to find ambassadors that can connect with the universities so the students can start building modules. And the idea is to really create, like WordPress. WordPress doesn't invent these plugins. No. Other businesses do, and communities do. That's kind of the ideology and the mindset.
It reminds me a bit of PayPal, how they became massively successful. They basically made it very, very easy for merchants to integrate this pay now with PayPal button on a web shop and all that. They focused, and I think still do, mainly on internet shops and web shops and all that kind of stuff. It's kind of the same as what you're saying. What they also did though, which I find quite interesting, is they went out, PayPal, and raised an ungodly amount of money. I can't remember the amount, but it was a lot back in the 90s when PayPal started out. And what they did with that money was simply say, okay, we take this million, I think it was $15 million or something like that, and we will go and give free sign-up bonuses for anyone who signs up, just putting an email and a password basically, and give them, in the beginning I think it was $100 just for signing up. Then they dropped it to 50, and then they had to drop it a little bit because everybody's like, okay, free money, let's sign up. But I think it was clever. I mean, obviously it became a massive success because then not only did they have merchants that said, okay, we want people to be able to pay online, obviously, so they made it easy for me with this pay now with PayPal. But they also have the users that actually has money. Sure, the money comes from VCs themselves, or whatever themselves, but they actually have some traction. Yeah. And then what they did, which I found, that's where they really killed it, is they partnered up with eBay. And kind of what you're saying, like when you get these big organizations like the Boy Scouts or something, that's when you really start seeing like, oh, okay, I recognize this Mama app or Aryze organization or whatever it is. And then you're off for the,
Well, that's something, that strategy was something I think could be done back then. But now you have so many, like Revolut and Monaco and the crypto app, and you have hundreds of crypto and non-crypto, like fintech apps that are out there, kind of that does the same thing as PayPal does. So back when they started, it was extremely revolutionizing what PayPal did. And it was maybe a way of kind of sticking it to the man, like showing the banks, no, we can get a lot of users. And it was being replicated in the world of ICOs and blockchains where people make airdrops or create bounty programs and stuff to kind of incentivize users to join in. Right. That's pretty cool, yeah. But in our model, the reason that businesses would initially opt in is because the savings compared to what they have today is phenomenal. And then something like weekend FX, like regular stuff. Banks are very analog. We tend to forget that sometimes. But by offering a very modern online neobank for these corporations, but one that is based on the fact that there's no risk involved. And when you look into, if you remove risk from the equation for a company like Pandora, that eliminates the need.
The jewelry company. Yeah.
And that eliminates their need to move money to the UK on Friday and then back where they need it on Monday, because they don't trust pesos or whatever currency they keep it in. They don't trust the bank that keeps it over the weekend. Like when we look into these cash management activities that businesses have to go through, and the hoops and loops they have to jump through to actually have what they need, what we offer them is a very important solution. Like forget me and you, forget modules, forget everyone right now except these businesses that try to transfer money around the world. The savings that they face using ours are astronomical. They're phenomenal. And then we can see, well, how can a business that has saved, say, 10% compared to last year, well, why not spend 5% of those towards scaling through a module, through an employee payouts plan, through a campaign to get your top 5 businesses to enter digital cash, because then now these 5 businesses can do business with each other free of charge almost, with no transaction fees and with instant settlements. So the incentive to recruit either your end users, your donors, your shoppers, or your supply chain, that becomes very apparent. So for someone like Superposen, when you look into how does a coffee actually end up in a supermarket, there's so many steps involved in that, and
payments on every single step.
Exactly. So we can figure out where's the smartest way to position ourselves. Is it with the tea farmer or the coffee farmer? Is it with the supermarket chain that purchases a lot of stuff from all over the world? Is it one of the middlemen, one of the supply? Where is it smartest for Aryze to position ourselves and optimize something? And the cool thing is that we're not going to invent all of these solutions ourselves. Smart people working through our academy, our ambassador program, our university relationships, they are the ones who will think these thoughts. We just entered an agreement with a university in the Netherlands, and we're doing innovation courses and blockchain courses and all. When you hear the ideas that people come up with, it is based on challenges that they know and face. So like one of them is like, oh, my dad works in this and this. He told me about the hurdle that they have with this and this. Could we do this and this? I'm like, yeah. Why don't you sink your teeth into this and look at this and look at this? And suddenly the guy or girl has created an extension for, let's say, a company like Sodexo, which has millions and millions of people that work with them. Suddenly you have a foot in. And that doesn't mean that Aryze should be the one making the sale. Well, if a smart person from a Dutch school has made this happen, well, brand it, sell it, commercialize it, run your own business based on digital cash.
So not only are you bringing in the 60% of whatever the amount of people, world population is, and banking them, the unbanked becoming banked, you actually are enabling innovation and unleashing the potential that they have because they can build on top.
Yes. So if we go to the Filipino FinTech Association and look at the 100 startups in there, and we scout for 5 of them that make sense for us, and we make modules out of those 5 services, then suddenly Filipino kids and families and whatever, they have access to the services they're used to, the tuk-tuk service they're used to, the bus ticketing service they're used to, the pay your rent like you're used to. Why? Well, because these extensions and proposals are designed and made by people in your community, by your folks. In the same way, our association with the Armenian blockchain associations, well, they're thinking like, how can we, there's a conflict now going on in Armenia, in Artsakh, and some people are looking into how can we rebuild the churches that are being blown up? How can we crowdfund reparations, and how can we do different things? We wouldn't maybe never have thought of that as a Danish company sitting in Copenhagen. But by having the association with these people, we can say, look, you have a merchant account with us. Now you can issue dollars to a ledger, and then you can use that for a crowdfunding campaign, or you can use this for this and that. We need people to think for themselves, knowing what tools they have available.
And that's, I mean, in a sense, you're also building an app store, right?
It's a modules. We call it the modules market. Yeah.
And the amount of innovation that has gone into, App Store on iPhones and Android, I don't think Steve Jobs, when he initially created the App Store, would imagine the amount of apps and crazy innovation that happened. Yeah. Maybe he did because he was a genius, but it's pretty amazing to see, just a few years after the App Store launched, then all of a sudden everybody was hailing a ride with their phone.
I think you're right. I don't think he could have comprehended to understand all of the apps that would be there today. Like maybe he had some ideas. I'm sure he did. I also have some ideas. We mentioned a few, like lending modules, travel card modules, whatever may be. But we honestly have no idea what kind of cool stuff people will design and build themselves, and what will suddenly become popular when people can just make extensions and solutions like this, right? What does it mean when you can suddenly send $1 to a YouTuber for free, like, or a cent to directly to a person, and that person are given the tools to give you cash back or follow along or track me or whatever services that they want to offer as a module. When, like on WordPress, you can just click on BuddyPress and then you have a Facebook clone. You have a social media platform you can then give to your 10 best friends, and you have your own private social media site.
And the reason why I like the App Store example actually the more I hear about Aryze, the more I sort of get that perspective, because you have basically today banks that are heavily regulated. Not everybody can go out and create a bank, basically, and all the different features that goes into building a financial new kind of product. But with something like Aryze, blockchain, and all these different things, all of a sudden the barriers are dramatically lowered. People have more access, not only to actually do payments and transactions and all that, but also build on top of it.
Exactly.
Just like the App Store, I'm not gonna build a phone and an App Store and all the different, plumbing that needs to go into all that, but I can build an app on top of it, and all of a sudden innovation becomes completely unleashed.
Exactly.
And that's basically what you guys are spearheading with this, just around payments instead of mobile phone, basically. Yeah, that's pretty cool. And I mentioned about funding also on PayPal before. The raise, I think, these $15 million or whatever. You also had the first ICO in Aryze. I can't remember the year, but a few years back, maybe something like that. 18, yeah, 2 years ago. Probably, so the first ICO in Denmark. Yeah. How was that? Like, tell us about that journey. I'm sure it's never easy to be first, right? So.
Well, we started raising or planning the ICO, quite early on, and wanted to do it proper. And Aryze has always considered ourselves not like an anarchistic, hardcore tech company.
Right.
No, we want to operate as a regulated financial institution, so we follow the rules. And that also means that when you raise money, there are certain prospectus laws that you need to abide by. You can't just raise money without involving the authorities, so to speak, and following the rules. There's a lot of, I can't just market anything to the people, especially not if it's a financial instrument. Right. And what we saw in the world of ICOs is that nobody cared. All kinds of companies just created tokens and released them and raised money, millions of dollars, hundreds of millions of dollars. Sometimes, it was insane. It was a file coin in 3 hours raised, I don't know, crazy, insane amounts of money. We knew that that's not a healthy and sustainable way of operating. We knew that that's not going to be permitted in the real world of finance. So we thought, all right, well, we want to make a token sale. There are plenty of reasons for having a token sale, and it makes sense for our business and our the way we pay out dividends and stuff. But we did it as a regulated sale. So we designed a pre-sale, only sending our white paper to the amount of people that we're permitted to do so. 150 people or something like that. Is one of those old rules when if you have an investment opportunity, you would send like probably a dove or a letter or a horse or something to 100 people, and they would like, yes, I have received your offer, sir. But I shall invest. I shall invest. I have 7 horses and a goat. But these kinds of things are still in place today to a certain degree. Right. So even in a crypto group of 14,000 people, I haven't made a post offering Aryze tokens to anybody.
Because it would be illegal.
It would be illegal in my own group that I've fostered and created.
It's fucked up, man.
And I know that because the Danish FSA and SCAT are in that group. They told me. We're at a meeting. It's kind of fun. They told me that they have. They said spies, but it's kind of funny because we know who they are, right? But they have members in.
Right. But is that because it's not crowdfunding then? Because if I was to create, I don't know, a glass or whatever product that I want to put on Kickstarter, I can promote it like crazy. So it's because I'm selling a product and not selling equity. Is that the difference?
Kind of, yeah. You could say that.
Right.
You could say that. It's different when you look at crowdfunding because you're actually offering a product which hasn't been built yet.
Right.
Or like entry to a park which hasn't been built yet.
Right.
Or
but Aryze hadn't been built yet either. So
yes, but what we were selling in itself it reminds of a financial instrument because we use it to pay out dividends to shareholders, and there is a commitment of a buyback. When we earn revenues, half of our gross profit goes towards buying back our own token and burning it. Okay. So like a constant dividend payment. And as soon as you talk about an increase in price and you project what might happen with the token price, then you're moving into the realm of financial instruments. So we couldn't just say, well, it's whoever has the coin can use our app for free. Like maybe we could have done something like that, but that's not the essence of the point of the Aryze token, right? That, but we constructed it in a way that we're close with the Danish FSA. They had a look at our white paper. We did it. We completed it. We raised some money, some early pre-seed money, which has then been what we have had the last 2 years to build and conceptualize and scale and have important partnerships in place and really pinpoint every element of our business strategy. From what are we doing, who are we doing it with, how does it work, who are the first clients, where are we regulated, who regulates us, what do we do legal, how do we do accounting, can we do this from Denmark, all of these things have been kind of ticked off. And now we're about to enter a $15 million raise. So let's hope that we also do it like PayPal did.
Yeah.
Which is again.
That seems to be the golden number for everybody. $50 million. That's what you need to scale.
Well, it's more of a coincidence, I think, that it matched the exact same amount, but because all of the 15 that we need are accounted for why we need. That exact amount. It's not just an amount that we try to fit the stuff into. No, we have the stuff that we try to figure out what the amount would be.
What do you need the amount for? Can you talk about that, or is it?
Yeah, absolutely. Yeah. There's technology is not cheap, and especially bank grade, cloud native, hosted with best in class data centers. It's not a cheap solution, but it's what's needed to build something that operates in the real world and speaks the languages of banking networks and card schemes and all these things. So technology costs some. We have an agreement in place with a company called Episode 6, which is a very important key player in this. And we have an agreement. We've been working with IBM for some time now. And we will be utilizing their developers and their environment to host and build the various components. And
IBM powers the majority by far, I think, of financial institutions.
That's why we looked into IBM to begin with, because their mainframe facilitates very large percentages of transactions and banking traffic today.
Makes sense.
And then another important part of this is the licensing, naturally.
Right.
So obtaining a bank license.
Compliance, legislation.
Yeah. And long story short, we have an acquisition model in place where rather than obtaining a banking license from zero as an unknown Danish company, what we do is we purchase enough of an existing bank.
Right.
So
the majority
of an existing bank, which today operates in a quite analog way, but has the proper processes in place and is a regulated bank. And what we would then do is essentially convert this into becoming the compliance center for that jurisdiction.
Right.
But what it enables us to do is to build this neobank around that license.
Yeah.
So our road to market will be phenomenally faster than if we had to do the whole Revolut model, like where you take each step at a time. But this is a instantly scalable solution based on the US dollar from the get-go.
Right. So you buy, for example, a US bank, so you have people depositing dollars. I guess they can receive also euros, or is it only dollars?
We have a strategy for the first five currencies, but the dollar is the one that is currently in focus right now. Right. Then there are various ways of enabling the FX from dollars to other currencies. Right. And we can support some other currencies directly through an e-money license and an extension through other banks that then leads back to our main bank, our own US bank. So there are some constructs that needs to be set in place to fully support multiple currencies, but we have a 15 currency strategy over the 3-year launch plan. Okay. So the first 5 are, we have the dollar, we focus on the euro and pound, and then we look into, I believe it's Mexican pesos and Polish zloty. Right. That's kind of the short list right now. Right. Again, because of remittances and the need for example, migrant workers in Eastern Europe to receive payments from UK companies, and rupees is really important, and South African rand is really important, but we kind of have this live prioritization list where it can move and it can change, so it's not fully set in stone, except the dollar. Yeah, that's it.
Nice. So you're basically going on a shopping spree, buying banks so you can support all these different currencies, and then have everybody use the app for doing these transactions on whatever blockchain that they want to choose to use.
Yeah, either using our own Mama ecosystem, if that's familiar and easy to use, for you can use that. But it's important to have that link to the world of blockchains, because then you give the tools that developers need and thinkers need to build new stuff. Right. Like if you took the Tether dollar and then you built something for your university cantina where everybody can pay using a CBS coin. You make a CBS coin where
Copenhagen Business School.
One CBS coin equals 0.1 Tether dollar. So you kind of have a price pegged to the Tether dollar. Right. Now you scale this, and the cantina realize, this is cheaper for us than paying mobile pay. We can do this, and we can settle once a month by selling, or doing something. So let's say that a smart person from CBS builds this, launches it with CBS, sells it to Harvard and Oxford and all the schools on the planet, all the cantinas in the world starts using this. Nice. They wouldn't, because the Tether dollar can go away. So there's risk, because where's the money? It's in a bank in Taiwan somewhere. So we need to give a version of cash which is not insecure to these smart people, or else they're not going to be. Because today you're bound. You can use Bitcoin or Ethereum or one of the 100 stable coins, which are all risky. Right. You don't have, then you have DAI. DAI is really interesting, but it's still a cryptocurrency. It's very abstract to understand and exit and use and prevent,
The average Joe is not going to use that.
The average Joe is not going to use it. But by offering digital cash through developer licenses to, let's say, ambassadors, we call them Aryze ambassadors, they might start conceptualizing how a CBS coin could look. Right. They might end up with a module to Mama, or they might end up with a complete white label solution based on Ethereum and whatever they want to do. They just need the liquidity being provided in a format which is 100% secure, so that you can actually scale your business. Right. Because right now all the stable coins are just in and outs. You use it to you enter, you buy Tether, and then you buy whatever you need. Yeah. You don't hold it. Right. This will be the first thing that you can actually hold more securely than exiting to your bank account. You would do it the other way. You would exit to digital cash, because it's so much more secure than your bank account would be in terms of credit risk and market risk.
I definitely agree that liquidity is one of the big reasons why people use stablecoins like Tether, Pax, whatever they're called. But I also see with the most recent DeFi wave that we've seen, especially here in 2020, that people deposit dollars and make it into Tether, basically put dollars on the blockchain, and then they deposit to something like Celsius or Nexo or whatever, all these different DeFi companies, and they earn a high yield, a high interest rate. I think Celsius, if I remember correctly, they offer like some 10% or something like that on Tether dollars, basically. Do you see this happen in general? Is Aryze also looking into this, like basically the whole DeFi space, which has exploded?
Yeah. We briefly touched upon it a little bit before, but having the link to Ethereum enables us to issue, say, e-dollar, e-USD, called e-USD, onto Ethereum. But it also enables us to have the tools and solutions on Ethereum being kind of interoperable with the e-dollar.
Right.
So it goes both ways. Liquidity with Aryze can work on third-party systems, and third-party solutions can work inside our framework. So that two-sided thing is really important, because we can make DeFi solutions available for the average Joe, but it won't be all the DeFi solutions out there like it is when you access it directly through Ethereum. So we could offer whatever we want to offer to our users, inspired by the world of DeFi, and even sometimes based on the world of DeFi. So the fact that you can get 10% of your tether, fantastic. Now, you got to somewhat trust Celsius, but there's a lot of DeFi where you don't need to trust Celsius. You trust the system, right? So where you trade towards other smart contracts. Yeah. You offer
Compound, and there's a few decentralized.
Yeah. And I'm not hugely into that, but essentially you can get the Celsius effect without Celsius. Like you can get it hardcore blockchain, online. Open source distributed without a central point of Celsius.
Do you think DeFi is in a bubble? Do you think it's overhyped at this point?
I think that we are going to see a future in just a few years where Aryze will be able to offer you, for example, interest on your deposits in Mama, and we will be able to do so. For example, they say you get your salary in 3 days, but you got $5,000 in your account, like $1,000 in your account.
Right.
Why not lock 80% of those up for 3 days, receive whatever something in return? And that can be done by, for example, offering this as liquidity for a trader that wants to go long on something or want to short something. So you can there are ways where you can, based on trading cryptocurrencies, lock up or stake existing assets and then receive a form of interest rate, like you see in the world of DeFi, where you can offer liquidity to certain traders and liquidity pools, and then you get a certain percentage of the fees associated with the trade falls back on you, depending on how much liquidity you actually provided.
Right.
So I think that if I trusted Tether fully, and I wasn't bound to Celsius, which is also a company, I would use those kinds of solutions as my primary bank.
Right.
But there is still risk with Tether. There's still risk with Celsius. So that's why I have a bank in Denmark, a regular, good old bank. But imagine now if you had a good old bank, but this bank said, look, we're a bank, we're regulated as a bank, but we don't do any lending. And then they showed their solvency is backed 1-to-1 using third-party global trusted auditors.
No fractional reserves. No nothing.
Yeah. So now I have a bank, but I have a very secure bank. Very secure bank. And from there, it can only grow, because the opportunities and the possibilities that you can, once you are into this system, will be phenomenally faster and more agile than, let's say, extensions to Revolut, where you have concierge service, you have lounges, you have whatever, 5% on hotels, and you have something else, right? So it's whatever Revolut wants to offer you, you can do.
Yeah.
But this is whatever the community wants to make available can be made available, and you have the liberty to opt in and opt out of solutions. I imagine that when somebody from Germany comes to Copenhagen, they should just receive a notification saying, hey, welcome to Copenhagen. Activate Rejsekortet, activate mobile pay, activate DOT, the bus ticketing app, and activate Coop, the supermarket chain, so you get 5% back. Like, enable the Welcome to Denmark bundle. And now you are integrated into the services that we use here. When I go to Kenya, I should get an M-Pesa module saying, hey, join M-Pesa, make payments through M-Pesa, welcome to Kenya, or whatever bus ticketing service they use. So having that where I can opt into a service and then I can opt out again.
Yeah.
I can opt into a lending provider and I can opt out again. I can opt into a travel card and I can opt out again.
Right.
And that it's like keeping a card in your physical wallet, right? It's like a membership card. You put it in your wallet and you throw it out. Right. So we designed a wallet like a physical wallet, and digital cash like the values behind cash. So you can hold all your extensions in your wallet, like your Fitness World membership card, your gasoline card, and you can opt out again by throwing the card out. Now I'm not a member anymore.
Right.
Kind of that mindset, I think, is really important to offer that kind of agility. And imagine the competition now that you have 6 or 7 Scandinavian lending companies that all wants to offer you the best interest rate to give you a loan through their modules. Yeah. And then you kind of put Lendino, Lendit, Nordea, and another lending provider up towards each other.
Right.
Like, who can actually give you the best loan?
Yeah.
And I think competition is extremely healthy.
Yeah. That's what comes with innovation typically. Transparency and a lot of competition, which all benefits the end consumer. But the more I talk to you, basically, Jack, you're known to many people as Bitcoin Jack. But the more I talk to you, the more I realize that you're actually pushing more for stablecoins. It seems like you're not talking like for this past hour and a half that we've been talking. You haven't mentioned that you're introducing in Aryze your own cryptocurrency like Bitcoin. You don't really advocate for buying Bitcoin like most other people would do who are working in the same space as you. But is that true? Are you sort of looking towards a world where, listen, we have existing currencies. There's no need to create new currencies. What we need to do is to make the payment systems, which is what you guys are working on, more easy, democratic, accessible to people.
I like the new currencies. I like Ethereum, Ether. I like Bitcoin. But we got plenty now. We don't need any more new currencies. True. What we need to do is make the old currencies as smart as the new ones so that they speak the same language. I still believe in the grand vision of cryptocurrencies and true cryptographic money. I still think I think that money, the way it works today, is not going to last for a long time. But I do acknowledge that we need a stepping stone towards this new economy. Right. And that comes with making dumb money smart. Because once money is digitized, it can function on same systems as the smart money can, as the new kind of money can. And it can work interoperably with these systems. Right. Are we using dollar-backed currencies in 10 years? I don't know, not necessarily. That's why the Mama app is designed as a multi-asset modular app.
Right. You're not married to either fiat or crypto.
No.
It doesn't
so we
really
will
matter.
support deposits that will be converted to digital cash.
Right.
But there's nothing preventing us from adding new currency support like Bitcoin or Ethereum. And gradually we would be able to add various tokenized instruments, stocks and shares and electricity and rent and whatever you want to add to this multi-asset environment. Right. But the first asset needs to be money, and it needs to be done in a way where it's scalable. Because the stable coins of today are not, as you explained before, it's an in and out. Right. But we need to have something you can hold, something that you can lock up for 5 years in a smart contract. Right. If you're a business that has a 10-year plan with another company or a 5-year plan, and you want to lock it up and say every year we release a 10th of the funds or a fifth of the funds. Can't really do that today. There's no place to keep your cash safe for a long period of time. We offer that place. And then you can move it to Ethereum and build the escrow solution that you need. Put a smartphone on a ship and make a command, a script that says release half of the funds when 80% of the journey has been traveled and the remaining percentage when it docks in the harbor. Right. Those kinds of systems are thought by innovative people who are hired at the Mask Innovation Lab and at NITS Innovation, whatever, and whoever they be. Innovators exist. They just don't have the tools to make these things a reality. Because you say to them, just lock up 4 Bitcoins for 3 years. Can't really do that. Like, what would the price be after 3 years? Would it be more or less? And what is it? Is it regulated in 3 years? Can we...
What do you think the price of Bitcoin is going to... Like, right now, this is 20th of November. Bitcoin's price is like 18,000 and something. It seems to be, 2017 all over again. We've seen dramatic increases in Bitcoin and all the other coins. Where do you think we're going with all this in terms of price and adoption? Those two things go hand in hand, I think. Where do you see us going from here with the new currencies, not the fiat currencies?
I think we're gonna see $12,000 before we see 22.
20,000. Okay, before 2020.
I think it's gonna before Bitcoin hits a price of $20,000 or $22,000.
Right.
It's gonna see a drop to almost 10,000. I think.
Okay, so you see.
I think this current, as of today, the price of 17,000, 18,000. I think it's gonna adjust.
Right.
But I do think that we're gonna surpass the 20,000 mark again.
What do you think is gonna drive that drop? Is that people just cashing out from Bitcoin after they made a lot of money, or is it something else?
Every time I hear about the Bitcoin price now, I'm like, wow, it's high. It drops. Every time. Every time. When it hit $1,000, it dropped. Hit $10,000, it dropped. Hit $20,000, it dropped.
Right.
Now it's about there again. It will go. So, maybe this is another wave, and it might surpass the 20, and then the next milestone might be 40,000 or something like that, or 30,000, whatever the psychological barrier will be at that point.
Right.
But this way of having a $17,000, $18,000 price tag on it, maybe it's a response to the way that governments just print money like crazy. Maybe it's a response to Corona. Maybe it's a response to Fedcoin and Libra. I don't know, but the response is too quick.
Right.
So it feels whenever something rises thousands and thousands of dollars in a short time, it seems somewhat fabricated or manipulated or somewhat intangible.
Yeah. So you think it's going to drop and then bounce back?
Yeah.
In a few.
I think we're going to see the same kind of tendency, like up and down and up and down and up and down, with the same growth curve until,
Same positive trend, basically.
Yeah, overall positive trend.
Right.
We talked about it on the phone before. But I also think that we'll see $100,000 Bitcoin price tag at some point.
Right.
But when we do, I'll be the same way as I'm like, shit.
You spent too much money
But,
back in 2014.
I don't see myself going and buying a lot of Bitcoin now to jump the train and being on the $100,000 journey.
Right.
I just follow it on the sideline. I think it's phenomenal. I think it's interesting.
Right.
And I don't think it's going to be a day-to-day currency. No. I don't see supermarkets ever accepting Bitcoin payments. I like that Bitcoin is expensive to move and it requires a lot of computing power and it's a heavy instrument.
Right.
It's like gold. If you want to move a brick of gold, you also need an armored truck and then some employees and you need some security. You need a gun. You need a vest. You need bulletproof glass. It's a heavy instrument to move around. And I think it's fine that Bitcoin is a heavy instrument to transfer around.
Electronic gold.
Yeah, I think it's electronic gold. I don't think that you should transfer it constantly. I think you should use it for the value it represents. So like putting it in escrow, locking it up to buy your house.
Right.
Or whatever you want to, where you transfer it once, you pay $20, which is high, very high in fees in the world of Bitcoin. Right. But then it's done, and then you don't move it again.
Right. So it's basically a savings, like the Bitcoin as a currency would be a savings.
Or
instrument.
a hedging element. Like you can also use Bitcoin as the liquidity towards other projects, right? So it's backed by a liquidity pool which contains Bitcoin, for example. So it maybe be the underlying liquidity. It will be a decentralized liquidity provider.
Right. Like the collateral for buying whatever.
Yeah.
So you don't hold Bitcoin. What excites you? What coin excites you, if any? Is there anyone?
I'm really fascinated by our own Aryze token, of course, because we spend a lot of energy on trying to design it in a nice way.
Makes sense.
But it's because the Aryze token we have is very. It reminds you of kind of the real world. So when you look at Tivoli Gardens, which you have a beautiful view of right here, if you have shares in Tivoli, you get the annual Tivoli card for free. Yeah, it's like a membership thing if you have stocks in it. So you can if you want to sell your shares, you still have to go through exchanges, and it's difficult. Sure. But you get some kind of member advantage. Right. What we have is a token. We use it to raise the capital that we need, so we have an instantly scalable solution. Well, what we then do is we make this token available for trading on regulated exchanges. And through various broker-dealer setups, we can offer two-way prices on this token, like buy and sell prices, to users of Mama. So suddenly people who use Mama can just opt in to receiving tokens, Aryze tokens, like receiving shares. That means that we can offer campaigns saying if get a credit card, costs $15 or whatever to your Mama app, so you can withdraw digital cash from an ATM. Let's say that costs $15. We might say, why don't you buy Rise tokens for half of that, and after 9 months, it's released back to you. Or something like that. Instead of spending $5, why don't you buy $5 of Rise tokens and you have that? Like you get that instead of spending money. Right. Well, if 1 million people says yes to that, to a $5 yes. Well, that means that we buy $5 million worth of Rise tokens on the underlying exchange, and we get 1 million new shareholders in Aryze. Yeah. And that means that the tokens that are bought and locked up are not a part of our dividend and burn mechanism. So we, as I mentioned before, some of our revenues go towards buying back the Rise token and burning it. But the ones that are on lockup are not being burned. So we have two elements in this. How can we create incentives by having people locking up Rise tokens, and then we give them something in return? And what does that mean for the remaining Rise tokens that are then in the market, and the price of that? So it's a very fun financial instrument that is similar to dividend payments and stock repurchase programs and kind of the real world of doing finance, but it has some of the agility that you see behind staking and some of the things you can do with crypto coins. Right. So I think it's a really cool one. But I'm a fan of Bitcoin. I always will be. Other coins that are
other than Rise coin, is that what you call it?
Yeah, we call it a Rise token.
Rise token. Yeah.
But again,
is it something that anyone can buy on an exchange, or how is it distributed?
It will be. Yeah. Right. So we have a listing agreement with a UK securities exchange called Aryze. They're one of the first companies in the world to actually receive an FCA approval to operate a securities exchange. Right. So we will be listing with them.
So it's not a crypto exchange? Or?
It is a security. It's an STO exchange.
Right.
So it's a crypto exchange where they only list regulated instruments. Right. So you won't see any weird coins and stuff like that. It's not that kind of a...
No file coins.
Well, no, I don't think so. Step one is having that listing in place on a regulated platform, so institutional traders can purchase and trade in Aryze. Right. And then through various broker-dealer setups, we can make the coin available for average people. That's kind of the intention, the Aryze token. But the Aryze token is not what would be used to conduct payments. It's not the digital cash backing. It's like a stock. Right. It's an element that we use to raise money in an agile way and give an exit opportunity to the early investors, not after 4 or 5 years of listing on NASDAQ, but 6-7 months after listing on Aryze. Right. So that's a really, really cool way of bridging the gap, kind of, because we want traditional investors and regular VCs and the world, from the real world. Yeah,
from the fiat world. Yeah, I think the headline is basically the bridge between fiat and crypto, blockchain, or whatever we call it. Yeah. Which I think is fascinating. I mean, anyone who manages to do that successfully, they are going to be, on top, I think. And not necessarily on top, but just included in everything that goes on. They will facilitate everything, or a lot of things that goes on. Because right now, there seems to be a war going on, I think, between fiat and crypto. People just blaming each other for whatever corrupt thing that goes on. But in reality, we're all fighting for the same thing. We just want easy payments, fast, cheap, everybody included. We don't want people who needs to be unbanked. Like, it's also
I think we all want the same thing. We want the same thing. I don't think they want the same thing. I don't think Deutsche Bank and Bank of America wants that. No. They would have done it. Like, do you think Western Union wants lower fees? No. They like their high fees.
They want to make money.
Yeah. So it's a battle between the good and the bad. It's a battle between the new and the obsolete.
Right. So you think the legacy providers, let's call them that?
There's also all the ones in between. Like, I don't think the Revolut is a bad intention. Right. But I just think that if you see the abstracts, like both ends, I think that there are plenty of bad intentions.
Right. Yeah, I mean, of course, there are definitely incumbents that sits on top of the hill and wants to stay, like make sure that it stays that way. But that's like any other industry. Like anyone who tries to disrupt an industry, like the payment industry, they will face hardship and challenges from the incumbents.
Yeah. And then the incumbents will go away.
Yeah.
Like
if they don't want to adopt.
Like always.
Yeah.
Like it's the same battle like you had with the anti-piracy group in Denmark.
Right.
They lost. Why? Because the tech behind piracy was so fucking good and it worked and you couldn't stop it.
Yeah. Adopt or die.
Adopt or die. Spotify adopted, Netflix adopted. All of these companies are now running a similar kind of distributed network where you stream from the nearest location to you. They got it, they adapted, they changed it, and they created something better and smarter than the Pirate Bay. And now people jumped on that. But you're not gonna. But the anti-privacy group didn't win or prevent piracy. No, they lost. They said, "Oh, I can't do this," but they try to fight it. Yeah. And it's kind of it's not really the same thing, but it's kind of the same thing. Because you have the big banks that try to fight innovation, to try to hinder all of the cool stuff that goes on, calling it illegal, calling it supporting terrorism, calling it that, but not looking into the phenomenal fact that you can now share value globally. That's what torrenting did with data. You could share data globally distributed, but it was like, no, it's illegal movies. What would Hollywood do? Like, forget Hollywood for a second and let's try to understand how fantastic this is, this technology is.
But there seems to be incumbents like JP Morgan with the JP Morgan coin that is actually trying to at least embrace the technology. I don't know if they will be successful in it, but that's a discussion for another day, I guess.
No, I mean, I think it's equally healthy that you have the hardcore crypto anarchists as well as having the central bank Chinese surveilled digital currency. Let's have both. Let's have both abstracts and let's land somewhere in the middle.
Which is what you guys are trying to do.
Yeah, try to learn from both.
Nice.
Right? There's some things that doesn't make sense in the world of crypto. There's like, all right, well, so you create your own stable coin, you back it up with 4 or 5 different cryptocurrencies, and you issue some kind of stable coin. Well, how do you do proof of funds on the liquidity in the contract? Well, you can't. Well, that means that you're never going to get Red Cross to use your liquidity pool. Well, why? Because you can't prove that child pornography and terrorism and drug sale is not where the money came from. So there are just some things that, it's cool, it works technologically, like making a car that goes 400 kilometers an hour. You can build it, it's cool, but you're not going to get to drive it in a road.
It's not going to receive adoption.
No, it's not going to receive adoption, not going to be permitted to. So to all the crypto people out there, look, stop dreaming, right? Let's make a difference. Let's make a difference today where it is. I can't keep waiting and dreaming for some fantastic solution. Like, sure, it's cool that we have an anonymous creator creating a cryptocurrency on a 9-page white paper, releasing it to a bunch of nerds, and then it just enters the ecosystem, and we're like, wow, this is fantastic. Yeah, it's fantastic. But look, a decade has passed. And you still, if you compare it to the liquidity behind real estate or the liquidity to see behind some of these bills and bonds that we have available, it's nothing. It's not even worth mentioning.
Right.
So come on, let's get it out in the real world.
Amen to that. How do people find you, Jack? How do people find you online, on social media or whatever you use?
Well, if you find somebody who has my first name and my last name who's not me, that will be weird.
That would be impossible.
As far as I know, there are not a few Jack Nikogosians. That combination is.
But where are you active then? Are you active on
LinkedIn,
Twitter,
LinkedIn, and I have an Instagram as well. I never use it, but people can stalk me if they want. But LinkedIn, our website, our blog, we do a lot of cool content on that.
So Aryze.io.
Aryze.io, and from there, you have the links to all of these other channels.
Awesome.
LinkedIn for me. If people want to follow me and write to me, and I'm easy to locate on LinkedIn.
Nice. Well, thank you so much, Jack, for coming in.
Thank you, Mark. It's been fun.
Pleasure.
Thank you.